Good afternoon. Welcome to the Weekly Livestock Market Update. I'm Brownfield anchor reporter Megan Grebner. With us is University of Missouri, Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
We're going to talk a whole lot of pork today, but not necessarily in terms of legislative pork. We're going to talk actual pork markets, a little bit on the cattle side. But to get things started, let's recap what happened this week in the markets.
Sure. If we start on the cattle side of the complex, this week, cash-fed cattle were down nearly $1.50 this week, while feeder cattle markets were steady to 10 lower. I think we saw some lower demand for calves to go on wheat pastures this week that certainly drove those cash feeder cattle markets lower. If you look at the future side of the equation, we saw strength this week. I think part of that due to strength in that lean hog futures contracts this week. But December live cattle were up nearly $1 this week, while the January feeder cattle contract closed up more than $3 this week. If we turn to the beef side of the equation, that choice box beef price was down nearly $3.50 this week. And we really had weakness across the board in almost every component of that choice box beef price. But ribs and chucks certainly led the way with some lower values there. On the pork side of the equation, I think a similar tale that we've been telling here for the last few weeks. Cash barrel and gilt prices this week were down $2.50 on what's going to have been a record pork production run. While that December lean hog futures contract closed up more than $4 this week. Again, I think African Swine Fever certainly had some of the reason for the strength we saw there. The pork cutout value this week was down over $3. That actually puts that pork cutout value more than 11 cents below where we were a year ago at this time, and we had weakness across the board and all the components of that pork cutout value.
When we talk about the hog sector, is really interesting as we look at it, and in that really divergence between the different stories that the markets are telling. We're continuing to see pressure on the cash side of things. We're seeing a little bit more optimism coming out of the future side. At what point do we anticipate them crossing over and maybe seeing, do we anticipate it crossing over, seeing more optimism on the cash side as it relates to demand issues with African Swine Fever, or that not being the case and we see more pressure, and do we run the risk of a fallout on the future side?
Yeah, so I wish I knew the answer to that question. I think there'd be a lot of money to be made in these markets right now. However, I think it is important to understand that when you look at where pork production's at, 555 million pounds of pork being produced this week is a new weekly record on the pork side, has been what's been the dominant driver of what's been lower cash values. You look ahead now, right? So another week where we got more information about African swine fever in China and the potential that we now have ASF contaminated feed there, I think gave those futures contracts some strength. And I go, so we won't average in between the two of those things. We're either going to see futures come back to where cash has been of late, or we're going to see cash prices move up to some of these current futures contract levels. I just remind producers that I think there is downside risk here. If we don't see a major adjustment in Chinese pork production from ASF, there's downside risk in these markets. Perhaps it's a good opportunity to use some things like options contracts to protect the downside, yet leave yourself that upside potential if, in fact, we do get a big ASF outbreak.
Does it make it even more risky per se because we don't know exactly how much truth is coming out of what's being reported in China? So we don't have a good grasp on how.
Yeah, absolutely. I think anytime you look outside the United States and we don't seem to get as much good information, and certainly the Chinese have been slow to give us what we might consider good information on ASF. I go risky, more volatile markets as a result. And I think that's what we've been seeing of late as well.
Let's talk a little fair to finish returns. Take a look at those numbers. Are we surprised to see October's figures?
No, not really. I think when you look at the 72 cents a hundred loss that Iowa State University calculated for October of 2018, it's not a big surprise. I expect when we see November and December, we may see a little larger red ink than we even saw in October, given what's been happening on the pork side of this equation. But just large supplies of pork has certainly been the dominant feature and led to what's been a red ink situation. And again, I remind us, thank goodness, we're talking about some lower feed costs here. When we're talking about those lower pork prices, it's kind of provided a little bit of help to that bottom line relative to the red ink we might have run had we talked about higher corn and soy meal prices at this point.
And we're not seeing, it doesn't look like those will be making a big jump up anytime soon on the feed input prices.
It doesn't look like it at this point, Megan. We're going to get focused on what's happening in that South America crop here in the near term. I think before long, despite we said here in November, we'll get interested in what's going to happen in terms of acreage planted here in the United States next spring. Right now, I hear a lot of folks who are suggesting a lot of corn will be planted next spring. When you look at the S&Us for corn versus soybeans, to me, it seems like the corn S&U is a little bit tighter. But if we plant a lot of corn like some are suggesting next spring, that probably keeps a lid on prices unless we talk about a pretty serious dry weather situation unfolding next summer.
On the non-farm side of things, retail prices, as we take a look at those numbers from October, both beef and pork fell compared to September.
Yeah, so if you look at that retail beef price, it was down 9.5 cents relative to where we were in September. The retail pork price was also lower, down 6 cents relative to where it was in September. But both prices fell on a month-to-month basis. However, when you look at beef relative to pork from a year ago perspective, we're still talking about beef prices that are 8.5 cents higher than they were a year ago at this time, while the pork retail price is down 18 cents relative to where we were a year ago. I think that just tells the difference between what's been a potentially stronger beef situation on the demand side than what we've seen on the pork side. But even in both cases, it's been really amazing just how good demand's been given the kinds of supply increases we've been pushing on domestic consumers.
And then on the other side of that, I think about the export side of that and the fact that pork value has held on as much as it has when you're looking at massive tariffs going into China and into Mexico as well.
Yeah, absolutely. I think you've seen the pork side of the equation take the bigger brunt of what's been going on from a tariff situation. It is amazing that volume of pork exported out of the United States has been higher so far this year. It's really the value side of that that's been lower when we look at what has happened from both China and Mexico. I keep saying, the other positive here could be getting a successful USMCA to the finish line where all countries have ratified and get those pork tariffs out of the way for pork going to Mexico. I think it certainly helps our ham prices in 2019 if we can make that happen.
We know Mexico, and we know we're at least getting somewhere. Hopefully, there's a good start. There's a lot of rumblings where there's been rumblings about China and rumors that their demands have come in this week. We saw the president talk about how China wants a deal and to get it done. Does that provide some support in there anywhere to pork markets, or is it more of just a wait and see approach and see what happens next?
Yeah, so I think it adds a lot of uncertainty to the situation. I think we might still be a long ways away from being able to count on much there. However, getting rid of those tariffs on pork products going into China is nothing but a help for us here in the United States when you again realize that 2/3 of variety meats produced in the world on the pork side are consumed in China. That market's been tough this year, and getting that market back, I think could again provide some help to the bottom line on pork prices here in the United States. I think we just have a ways to go before we'll get to the finish line on that front.
Go back to the domestic side of things. We talk about retail prices. What happens, or what about the farmer share of those prices that we're seeing at the store?
Yeah, so I think on the pork side in particular, we've just been having very large runs of pork. It's good to remind us every now and again that the added slaughter capacity that we've brought on the pork side could not have come at a better time for us, given the record runs that we're talking about. We generally continue to see this trend of producers getting a lower percentage of the consumer value None of that surprises me, I guess, just given what's happened over time. However, you look at the last couple of months, and we've actually increased a little bit the consumer share of the producer share of the retail dollar that gets back. And I think we can certainly lay a portion of that at the feet of this additional packing capacity in the pork side.
Well, there's always nice to have a little bit of good news coming out of a lower price discussion in general. Scott, as we kind of wrap things up this week, really not a lot of reports for us to get into. I do want to talk a little bit more about the African swine fever situation. Rumors this week that there is African swine fever has been found in the feed supply. And then the big news coming Thursday evening that African swine fever has hit China's largest pork producing region, Sichuan province. Does that highlight that this maybe isn't controlled and this spread is not the last that we've heard about this spread?
Yeah, so number one, I know this is not the last we've heard about the spread of African swine fever in China. I think the news that we get out this week, although a little muddled when you have the Chinese government saying we don't have ASF in the feed supply, yet we have reports otherwise. It just reminds me that we're going to talk about continued widening, I guess, between where we sit currently in the cash side and the future side. And that's more volatility likely ahead as we have weeks of more information that suggests we're spreading ASF and other weeks where maybe it's quiet again. Volatility is not all bad by itself, right? It gives us an opportunity to lock in maybe some higher prices in those weeks where we have some news that would suggest ASF is growing in China. So as much as we sometimes, I think, complain about volatility, I just remind us it gives us some opportunities to market hogs at maybe some higher prices, and we just need to be ready to take advantage of that.
I think the other thing it does is highlight the need for biosecurity and foreign animal disease protection when we look at the Farm Bill, which I know I've talked a little bit about before, is really a risk management tool at this point.
Yeah, absolutely. So we need to be very careful about what's happening in this country and what we do in terms of trying to protect our livestock industries from disease issues, because we all know that the day that we have a disease outbreak, we're certainly going to have critical markets shut off to us, and that'll be what is devastating on the price side beyond the loss of animals in this country.
I think that's it really for things this week. I don't know. I'm going to throw like one little curveball at you. I did a story yesterday. It looks like Japan might be lifting the age restrictions on U.S. beef going into that country due to the BSE stuff. Good news for cattle producers. A little bright spot for them this week as well.
Yeah, absolutely. I think it is a bright spot. Just when you've seen how good that Japanese market's been already, and all of a sudden dropping some of the restrictions in terms of the age of animals going into Japan from the United States. It tells me their interest in U.S. product continues to grow, and even with what might be some cheaper tariffs on Australian product going into Japan, we're competing really well there, and maybe that's the precursor for a bilateral that will unfold with us and Japan in the coming months.
Would be nice to hear. We have a short week next week due to the Thanksgiving holiday, but a big week for reports.
Yeah, that's right. We're going to get a little bit of information on cattle on feed, cold storage, livestock slaughter, and consumer confidence all out by Wednesday.
Well, we will talk to you next Wednesday. We will actually tape a couple of days due to the holiday. Have a great weekend.
You do the same, Megan.
So our weekly livestock market update delivered to your email box every Saturday morning. Visit our website, brownfieldagnews.com. You can click subscribe. You can also submit questions and comments there as well. And for market updates twice daily, make sure to check out John Perkins' Market Minute. Have a great weekend. Gang Grebner for Brownfield.